The following podcast is recorded and produced by Emerge, a media creators co-op.
Welcome to the Defion Productions podcast. I'm your host, the hardest working nobody in Bitcoin, Don. And this is going to be the week in Bitcoin. We're going to talk about the economy today, as there's many tweets that we're going to go over, talking about some alarming factors and figures associated with our wonderful economy, depending on your perspective on what side of the curve you land on, if you feel like that is phenomenal or not. We'll jump into the charts, kind of take a look at where Bitcoin's price is currently as we sit filming this podcast on May 11th, 2026. Bitcoin is having a pretty decent day. I had a very nice weekend. In the last 7 days since we filmed the podcast, we're up almost 2%, sitting at 81,736. We did dip slightly below 80K on the weekend momentarily. We got into the 79s, and then we reverted back into the 80s this morning. Total crypto market cap sitting at 2.72 trillion, up slightly, a little less than 0.5% in the last 24 hours. Fear and greed has been neutral for quite some time now, sitting at 52. And if you look across all the other cryptos, you're seeing green outside of Ethereum and the stables. You're seeing green across the board. So things are good in our space, at least in the immediate. Silver is up quite a bit today. I did notice that it was up around 7% earlier today, trading around $86 an ounce. Gold was relatively flat. It was up, but under 1% or under 0.5%. Didn't take a look at equities. Not really sure what's going on there. Oil was up. WTI was slightly under 100. Brent crude was around 105. Still got this conflict going on in the Middle East. So that is kind of directing our markets for the most part. We're going to dive into talking about many of the things that are going on outside of the Bitcoin and crypto markets, more in the general economy. I'm going to start here with this tweet because this will kind of set our conversation off. This is a tweet from Hedgeye on X. The gap between Wall Street and Main Street has never been wider. U.S. consumer sentiment fell negative 1.6 points in May to 48.2, an all-time low. At the same time, the S&P 500 is trading at a record high near 7,400. Sentiment is now 13% below its 2008 financial crisis trough and well beneath the 51.7 bottom of the 1980s recession. Current conditions have plunged negative 18.8% year over year to a record low as real income expectations have declined for the third straight month. Meanwhile, the wealthiest 10% of households own 87% of all equities. Wall Street is celebrating record highs. Main Street is in crisis. I thought this would be a good place to kind of start at, Rich. That number, the wealthiest 10% of households owning 87% of all equities, it just brings to light like the talking point of the right when they talk about, you know, the economy's doing so well because stocks are up at all-time highs. And it's like, who is that really impacting? Even the 13% of equities that are, you know, spread among the rest of us, they're locked up in IRAs and 401ks and 403bs that we're not going to touch for 30 years anyways. So it's the wealthiest 10% that have those equities that are really benefiting from all this. And the rest of us are stuck with rising costs of goods and services.
Right.
What do you think when you see that, Rich?
It's one of these things that we talk about it all the time. It's like, okay, I have money in the stock market, but I'm not making money in the stock market like other people, like rich people are. I mean, I'm doing my investments do well, but like you said, even though I'm retired, I'm not touching them. Like I need those money for when inflation is making my pension useless. Like, because I have to save that money. That is my, you know, my what I want to do with it down the road. I don't touch that money. I don't spend it because I'm afraid that I'm going to, and I'm also afraid that something's going to happen. I'm going to lose half of it. So like, I don't touch that money. So yes, it's great when the stock market goes well, but it only takes one day in 2008 for me to lose half of my portfolio. Like, so I don't get excited about it because I figure I'm going to lose half of it at some point, or a percentage of it someday when there's a real crash. And that's why I'm getting better at moving things. I'm trying to find better things to move it into. But you're right. Like it's the same stuff where people are like, oh, wages outpaced inflation or outpaced whatever. And I'm like, but like 0.8%, or like my salaries are going up by what? By 1%? Inflation's killing it. Like I don't, or oh, like this is happening there, and these millionaires are moving out, and that's like, why are you defending billionaires and millionaires? Like, people got mad last week because AOC made a comment like, you're not going to be a billionaire. And they're like, see, she hates America. I'm like, no, she's telling you you're never going to be a member of that club because you work 2 jobs. Like, you're not, the only way to get rich is to become that, for most people, to become a corporation where you can not pay your workers very well and you can use property. Like the average person's not becoming a billionaire. I don't like her, but she was right. She was right. And people get excited over the stock market. Like that's not how you're making ends meet. You're not, you're like you said, we're not touching it for years.
Look at the chart it's on the screen right now. Wall Street S&P 500 is in blue, which is going parabolic since COVID. And then sentiment, Main Street consumer sentiment is in red, and it's just tanking, complete opposite directions. And there's a comment too I want to zero in on here that kind of like encapsulates the chart here. Hard to say the market is the economy since the top 10% owns most of the stocks. That 87% number, like 87% of all equities being owned by 10% of the wealthiest households, it's like you have to find a new talking point to sell on the right. Then stocks are up, like Dow 50K when you had what's her face with the Epstein files. What the hell's her name? I've drawn a blank. The attorney general. Bondi, Pam Bondi's like Dow 50K, like no Epstein. Dow 50K. It's like
that's not.
Yeah, but
that's not what people.
The people that are watching that, the everyday Americans, that's not affecting them. Dow 50K is not paying their bills. Dow 50K, even for the ones that are exposed to the stock market through their IRAs and their 401ks, it's not having an enormous impact on their life. Like it's just so tone deaf. Extremely tone deaf.
It reminds me of like reading history books about the Industrial Revolution, and the Vanderbilts and all that type of stuff. Like those types of people were making ridiculous amounts of money. Nobody else was getting rich. There was those millionaires of the time. They were the billionaires that we have now. They were the billionaires of their era, and they were just work harder. We gotta make the educational system prepare people to be factory workers, and we still do that. And it's the same thing. Like there was a time in the when unions were kind of making it a little bit fair, but that's kind of going away. But we still got people that are defending billionaires, and it to me that people don't get it. Maybe there's some people that are just defeatist. They've checked out because they know there's nothing they can do in their minds. So they just, well, whatever, what am I going to do about it? But the people that are out there celebrating it, like, see, the stock that proves that Trump's great because the economy's doing so good. But when the stock market wasn't doing well at different points in his presidency, they're like, well, the president can't do anything about it. Either the president can do something about gas prices or he can't, or he can do something about the economy or he can't. Like you can't just go back and forth depending on whether your guy's having a good day or not.
This next tweet is very alarming. It's tweeted by QE Infinity, which is pretty reliable. They tweet pretty good stuff. But it's cited from company that basically does this type of stuff for a living. Like they do like risk management, and they take a look at how things are going and make investment strategies based on that. So like I kind of, would I kind of would take like what they say and give some pause to the information that they're providing. And this tweet here says we are 2 weeks away from oil shortages and demand rationing, according to Bloomberg. Not months, weeks. Anyone that thinks this oil shortage isn't a serious immediate crisis is delusional. And this is a quote from the 9 Point Partners and the partner and senior portfolio manager who wrote the article that I also have cited here. Here's his article. It's in the next page. I'll go to it after I read this little snippet. The world is heading towards what could become the largest energy crisis in modern history, with oil shortages potentially forcing demand rationing within weeks, according to a leading energy expert in the oil and gas industry. We're not talking months or quarters. In the next couple of weeks, you'll have to rationalize demand by more than during COVID, says Eric Nuttall. Eric Nuttall, partner and senior portfolio manager at 9 Point Partners. And here's the full article. So he wrote an actual article here where he rationalized everything that's going on that he believes is happening. Nuttall says crude may rise to 150 a barrel in the coming weeks to curb consumption. We simply can't deplete inventories at this constant rate. And he just goes into like all the reasoning that he holds into his thesis. And I'll say, like, if you notice, if you're paying attention to the markets, which I have been pretty much every day, log into the computer, I check the oil prices at the current moment, and then I go to the AAA site to see the national average for gasoline prices in the country. And you're seeing what I've been seeing watching this stuff for like the last 5 or 6 weeks is there's a lag. Okay. Like gas prices didn't necessarily skyrocket when the barrel went from $70 up to, we got close to 120. Brent crude went from like 70 to almost 120. It did almost a 100% gain. It was like 85% it went up. And you didn't see the price like skyrocket immediately. You kind of saw it lag. It was really like the week before last and last week where you really saw like prices hitting 440, 450, like nationally, where California is like over $6 and you got diesel prices steady climbing. We talked about last week, getting close to like the all-time high. So these things are kind of lagging. And you've seen for like the last week that crude oil prices they've really tried really hard to keep like WTI under 100 and Brent crude around the 100 or 105 range. It's kind of been that way for about 8 or 9 days, but gas prices nationally continue to rise. So while this has been kind of a lull, your ceasefire, whatever you want to call it, and things have kind of been lulled, you're seeing the knock-on effects of gas prices playing out as a lagging indicator. And the longer this thing goes, the more we're depleting supplies. And, the Strait of Hormuz doesn't necessarily affect us because we don't get much or any of our gas from or oil from the Strait, but India does, but Russia does, but China does. And as those prices increase, like it's a global economy. Like it's not just because the US doesn't get gas from the Strait doesn't mean that we're not going to feel the effects, which we are seeing, which completely destroys the talking points of people like, oh, we don't get our gas from there. We have plenty of gas to last us. It's like we do, but price is still going up.
And let's keep in mind, it's not our gas. The gas is not owned by the United States. The gas is owned by companies that are international companies for the most part. Exxon's not an American company. Like they're an international company. So if they think they can get a better price for their gas, selling it to India and Russia, they'll sell it to India and Russia. Or they'll say, you want our gas, then you're going to pay more for it. And nobody stops them. So even prices will go up. Like whenever they want prices to go up, they'll go up just because, I saw a tree fall over. We better raise the gas prices. And like you said, there is a lag. And usually the lag is when it goes down. Like during COVID, when it crashed under $2, and everybody's like, yeah, but look how cheap gas was during COVID. Yeah, because nobody was going anywhere. Like we had four cars at that point, and 2 of them were in the garage for like 2 months. They never went anywhere. Like there was nowhere to go. You go in grocery store and Home Depot. That was the only places, the liquor store. That was it. You weren't going anywhere. So you're right, though. There is a lag, and that makes a lot of sense that it's going to happen, and we're going to see $6 gas. We're going to. There's no way we're not going to. And whether it's a little bit of the companies knowing they can get away with it, and also because of demand, I think there's a mixture of both. There's corporate greed, but there's also just clearly demand. So there's enough that's going to push it up.
The scary part is not just gas. It's not just what's going on in the Strait. It's not just what's going on at the fuel pump.
Right.
Look at the next tweet that I have here. This is when things start to get real. This is First Squawk, 515,000 followers. Their First Squawk is a global financial news service specializing in financial markets, macro, and geopolitics. And they tweeted something that was talked about on CNBC this morning. So you know that this is not just made up stuff. This is legitimate. Auto loan and credit card delinquencies in the United States have hit all-time highs. Stop for a second and read that again.
Yep.
Auto loan and credit card delinquencies in the United States have hit all-time highs. People defaulting on their car loans, people defaulting on their credit cards is at an all-time high in the middle of or on the cusp of an energy crisis.
Right.
We are, in my opinion, we are watching in real time. If something doesn't change, which I don't think it's going to, because I see no movements in any direction that it will, we are on the cusp of a potential global financial crisis happening right before our eyes. And I feel like, people know that the gas prices are going up at the gas pump and they see that, but I think this is going to hit people completely by surprise, much like the GFC did with the housing market in 2008, because most people don't pay attention to this stuff.
It's funny that you said that, because when you read that, I was like, this reminds me of the where people just walked away from their homes because they were like, I can't afford this home. It's not worth anything. So, and the bank can't grab all of them at the same time. So it's the same thing. I think people will just be like, well, there's no point in me paying off my car. I'm just going to wait till they come and repo it. I'll drive it for free because I can't afford the gas anyway. So if I'm not making the car payment, I'll just wait for they come and take it because I can't afford the stupid thing, especially when I just don't understand. Car prices have gotten just ridiculous anyway. Like, what people are buying like an SUV for, like, I have a friend that's got like an $80,000 SUV, like, and it's very nice, but I mean, like,
20 years ago, that was a house.
Yeah. Like,
right. I mean, especially in this area for sure. 20 years ago, that was a house.
I mean, it's definitely like, I think that's a really interesting tweet. And I never thought of that. And that the fact that they're warning that this is coming, it's the new 2000.
The red flags are being like, they're there. Like, we're seeing red flags. Like, there's the alarms being sounded, but like nobody's paying attention.
Well, then, but you have like the economic secretary for the administration came out and said, Americans, you need to go on vacation. You need to get in your car and spend your money. And
people are it's so tone deaf. Like, this administration is so tone deaf in regards to economic condition. Now, to be fair, I want to be very fair. The last 4 administrations have been terrible fiscally. They've all been responsible for where we're at. It's not just Trump. It's not just Biden. It's a combination of both parties, both administrations, many different phases of fiscal policy that have been bad. But the current administration that we have now is just completely like ignorant or just tone deaf to the fact of like what's really happening to American families right now. And people are I feel like more so than at any point in my adult lifetime, people are strapped. People that make good salaries in a vacuum. If you just look at their paycheck, you would think they're doing well, but those people are even strapped. Like, people are just so, and this is good. This comes back to, again, I'm terrible at self-promoting, and 20 minutes in, I'll do this. If you're watching this podcast for the first time, please like, subscribe, share. We're live right now on X. We're live on YouTube. We're live on Facebook. Please like, share, subscribe. Bitcoin Maxi podcast, Bitcoin only podcast. This is what we do. We talk about Bitcoin. We talk about the debt-based Ponzi scheme of the United States dollar and how Bitcoin is the opt-out. And all these economic factors that are occurring currently lead us to the conversation of Bitcoin. Please put the next tweet up, Rich, because this is going to lead into the next conversation. This is from Toby Cunningham, and I'm going to read out this tweet because this I can't say that word. This brings us to why Bitcoin is our solution. Every single day, the United States pays, this is every single day, the United States pays $3 billion in interest on its national debt. The money doesn't go to a single human being you will ever meet. It goes straight to the people who already own everything. The debt itself sits at $38.91 trillion. Politicians write $3 billion daily checks to JP Morgan, BlackRock, the Saudi Sovereign Wealth Fund, the People's Bank of China, and Japanese pension funds. The debt ceiling is also a massive scam. The interest gets paid first automatically. Your tax dollar lands in a bondholder's account before it lands anywhere else. This is not fiscal mismanagement. That would imply someone is trying to manage it. Nobody is trying. Then they debase the dollar to inflate the debt away, so you pay it twice. Once on your spending and once on the bonds that finance the spending you never asked for. There is no exit. They cannot raise rates without breaking the treasury market. They cannot cut rates without lighting another inflation fire. So they grind forever. $3 billion at a time, day after day, year after year. The right calls it socialism. The left calls it capitalism. Both are wrong. This is feudalism.
Wow.
And there's the chart. Like that's the thing that keeps getting me back. And you can put me back on screen because I can look like right at the camera when I talk about this. That's the thing that brings me back to this whole voting is complete and utter bullshit. Like people are sold this bullshit idea that every November, for every 4 years in November, they go to the poll and they vote for their Democrat or they vote for the Republican or they vote for whatever ideology that they believe is going to change things. And absolutely, unequivocally, nothing is going to change.
Well, even the fact of the candidate. So last week, they already said Marco Rubio is going to be the nominee. They already said it. It looks like like, don't we have like, a bunch of primaries coming up? Nope. It's going to be Marco Rubio. Like they've already decided that that's who we're going to get. Now, whether he should be right or not, doesn't matter. I'm very frustrated by the fact that, and this was the same problem that I had when Hillary Clinton was the candidate. To this day, I remember she dropped her logo and it's her turn. Like we're with her. That's what it was. Like it's her. No one should even run against her because it's her turn. She's been patient and waiting. So you should just accept that she's your candidate. And it was like, and Obama was like, no, I'm running against you. And that's how we got the nomination. And that's how she became Secretary of State.
People forget, people forget, you're bringing up a good point. People forget that, the right technically didn't have a primary either. It was a sham of a primary.
Sure.
The left definitely didn't have a primary. They trotted out Biden, and Biden was half dead, and they just gave you Harris. So there wasn't one. But people went to the voting polls and voted for DeSantis, voted for what's the chick's name? The one girl, I can't remember her name. She's stuck in the longest. I forgot whatever her name is, but a bunch of different candidates that were running for the nomination, and Trump never campaigned, never was out at any of the debates, and people were voting for these other people, and then we kind of just defaulted to Donald Trump.
That was the same thing with Clinton. They were like, don't, and it's not like you're the nominee. Like, I mean, you're the incumbent. If you're the incumbent, that's different. Like where the only time anybody really ever has pushed against an incumbent in my lifetime was Carter and Kennedy. Which Kennedy was it? The last one. I can't think of his name. The one that was the senator from Massachusetts. He was the only one that ran.
Was it Ted?
Ted, thank you. Ted ran against Carter because Carter was so bad. And he was like, listen, there's no way we're winning with this guy. We're going to lose. And so like, but because it's built to keep the incumbents. We're not talking about incumbents. We're talking about the fact that they were pretty much, nobody was willing to run against Trump the second time when he ran again, but not his reelection, this election. And then the same thing with Clinton. Like nobody should be running against her because it's her turn. And because she was patient, because remember, she was supposed to be the nominee, but everybody was like, no, that was the one time where I think they stood up against the party and we got Obama as the nominee for the Democrats. And there was some things where what's his face was running against Hillary the second time, but we knew he wasn't going to get the nomination. Bernie Sanders,
who actually technically
he really probably
got it.
Yes, he should have gotten it, but they invented this thing called superdelegates.
Yeah, took it over.
So you're totally right from the standpoint of I understand your position why it's not worth voting. Because they're telling you who you're voting for anyway.
This is it. This is what your votes are. They mean nothing. Your votes mean, look at, we have Donald Trump, who people thought was going to come in here and just change everything, to change all the nonsense that Biden did. And again, I hammer Trump, but I'm not pro Biden. The Biden administration was atrocious. Joe Biden was arguably one of the top 3 worst presidents we've ever had. Hands down. He sucked. He was terrible. If he even was calling shots, which he may not have been calling shots.
How many jobs he created and all that stuff or whatever, but it's like
it was post-COVID. Like it's all bullshit.
Anybody sitting in the office?
My 14-year-old son could have created jobs because you just literally took everybody's job away for a whole year and then you put them all back to work.
Anybody, it's like I win a fantasy.
It's complete bullshit
because I just happened to pick somebody. Anybody who sitting in there after COVID was going to get a strong employment because companies started bringing everybody back. So that counted against the numbers.
But you got to call balls and strikes. Look at Trump's administration. Like, what are we doing in Trump's administration? Like, what's happening? What, like, we got this war that most people don't want. That's not even debatable. Like, the polls are showing you, no matter who does it, the left, the right, the middle, the people aren't cool with this. Like, people are not cool with the gas prices being as high as they are. People are not cool with like this whole Epstein debacle. Like people are not cool with that. People are not cool with like this president that comes out and tells you one thing and then does the exact opposite. And we have a whole term taco that we got like Trump's going to chicken out. Like it's one thing to like want to be transparent. And it's another thing to like never know what's real and what's not on a level that we've probably never seen before. And it's just like people think that they're gonna change things by voting, and this is my like planting my flag in the sand. If you want things to be different, you have to make individualized decisions, not at a voting poll, not at like social media posts. You got to make individualized decisions on how you run your personal economy, either a family economy or if you're single, your own economy. And that's the way that you choose to allocate your assets. That's the only say you have in anything. And it's the belief of this podcast that the only asset that exists that you can truly own is self-custody Bitcoin. If you want to take back sovereignty and control, self-custody Bitcoin is how you do that. Not just owning Bitcoin, not owning crypto, not owning XRP or Ethereum or some bullshit stablecoin. It's Bitcoin in self-custody where you have a 12 or 24 seed passphrase that nobody else has that you own, and that's the way that you take your sovereignty back. That's how you opt out of this nonsense of $3 billion every single day being paid by your federal government, regardless if a Republican is there or a Democrat is there or if MTG is there or she's not, or Boebert's there or she's not, or AOC's there or she's not, or Pelosi's a god trader. None of that matters to you as an individual, because I see I'm on social media, and I see people posting and complaining and getting all worked up about shit that they can't control, that controls them, and they don't even see it or realize it, and they make terrible decisions, the ones that actually matter, and complain and blame it on Biden or complain and blame it on Trump. As much as I despise the job that President Trump is doing, President Trump has nothing to do with anything that's going on in my life, good or bad. Zero. Joe Biden for 4 years had absolutely no effect on my life, whether he had his wokest of woke policies or Trump's got the whatever. None of it matters. It's all theater. Like it's just drama. It's a drama club. It's high school all over again. That's what social media has become for this political nonsense. Like people really truly believe Trump is going to save them. I'm sorry, he's not.
I mean, just the fact of, like I said, these distractions, that these things that he's focusing on just shows me he's not a serious president. He doesn't like, we're going to release, because he's getting so much shit about Epstein files, which we barely talk about anymore because the media got bored with it. But now we're releasing like alien stuff. We're just alien hunters and shit. And this is a letter that some guy wrote when he was in the Navy or whatever. I'm like seriously, this is what we're doing. We're painting the mall. We're having a WC fight, WW whatever fight on because it's the 250th anniversary of the country. Like these are the things that. Like, I'm sorry, like, just someone do your job. Like, and all of these people, aren't doing their job. And I'm not saying that the last president's people, there was probably a time like 30, 40 years ago where maybe these government was slightly more efficient. I don't know, but we know now that it's just ridiculous. And the amount of money we're spending, the amount of money that we put into the budget, but they put into the budget for the military, for a ballroom, and it's like, and I can't, and people can't pay their bills, but we're excited because they admit a job number is 150,000. Everybody act like it was it was a lot. I'm like, that was lower than any month under Biden. Like, and I'm not a Biden fan, but it's like, how are we celebrating a number that's it's not a good number. Like that's 115 is not a good number, but it's look how great it's turning the corner. But again, because the narrative was you have to find a way to make, again, because of social media, it's just ridiculous.
So I'm taxation is theft guy. I don't like taxation, but I like to call balls and strikes. And I saw this tweet and I wanted to share it because I think it makes a good point. The top tweet says, why does Denmark consistently rank among the happiest countries despite having some of the highest tax rates in the world? I wasn't aware that they had the highest tax rate in the world, but the bottom part I thought was a really good response, even though I don't necessarily agree totally. I think he makes good enough points that we can talk about it.
Right.
You guys are obsessed with the tax rate, but you ignore the life rate. If you add up your taxes plus health insurance plus copays plus tuition plus daycare, plus retirement savings, you are paying way more than we are. We pay just one bill and get everything included. You are paying 5 different bills and getting nothing. We aren't socialists. We're just better at accounting. And I had to take a second and really process that. And he makes good point. As much as I'm not pro-socialist at all, but I will say after reading that, I have a different perspective a little bit on that, and he makes valid points that are hard to debate against. I know, Rich, I probably lean a little bit more right of center. You probably lean a little bit more left of center to be fair.
Yeah,
we're both pretty center, but I'm more right of center. You're more left of center. So this would be more your ballpark, I think, to kind of tell me what you think of that. Cause for me, I see that and it's we're paying high taxes here.
Ironically,
but we're getting nothing.
I was in Denmark. I've been to Denmark.
Okay.
Back in 1985, I've been in Denmark. So I've been there since, a long time since I was there. But one of the things I know about Denmark, again, is that over time, and this is true about a lot of your European countries, and I realize they're much smaller than the United States, and they don't have the problems the United States have. But a lot of our problems that we have in the United States are our own fault. We decided to be the policemen of the world. We decided we had to be. And that's fine. And you can argue it. But because of that, we have become what we are. Whether we have these ridiculous, again, getting off the gold standard, we've talked 1,000 times about the fact that our military is ridiculously strong, but also the way we value the auto industry. Like in Belgium, for example, I have a friend that's lived in Belgium. He's from Belgium. He's lived there his whole life, except for the year that he was here as an exchange student. And you don't need 3 cars in Belgium. You have to get permission from the government to own a 3rd car. Why? Because they've invested in infrastructure so you can just take the train anywhere, whether it's in your town. You don't need a big fancy SUV. It's very difficult to get a 2nd and 3rd car in these countries. And it's not socialism. It's because we have built so you're not wasting all your time paying a car loan. You already got taxed on the money that you made. So now you're going to buy a car and you get taxed on that car again. So there's a philosophy difference. The other thing is that it's very difficult for a president or prime minister in those countries to maintain power because they have a multiple party system. So you get fired easily. You get removed from office almost immediately if you do something stupid. Like you tweet the wrong thing, you're out. They're going to vote you out because there isn't one dominant party. There isn't like two dominant parties. There's like 4 or 5 parties in these countries. So they're constantly rotating. Like Belgium at one point, I remember, like maybe 15 years ago, they couldn't get anyone to be president because the guys kept getting fired because they all stunk. And the country just kept going to their elected officials like, get this jerk out of here. So the guy got voted out like time after time after time. The countries are run differently. They have a parliamentary system depending on the country you're talking about. But because of that, the population of those countries has been able to say, we shouldn't have to pay for this. And over time, they've been able to take control of their country. It's not really socialism. It was the will of the people.
Yeah. I'm going to play this video. Tucker Carlson, who we talked about last week, but he's talking about credit card debt. It's a short video. It's like 29 seconds. Let's play this real quick and we can talk about it.
Why would anybody use a credit card and roll over the interest? 40% of American adults cannot repay their credit card balance. That's 111 million people. And they are paying, on average, 23% interest. So that's not a win. That's a sign of desperation and impending poverty.
So I wanted to play that video. I probably should have queued it up after that tweet talking about, credit card debt and U.S. auto loans being at all-time high. But it kind of comes back to that. So we're at a place where our debt for credit cards is at the highest, and then you have 111 million people that are rolling over their debt. It's a bad formula.
Yep.
It's just not.
And he's right. Like what he said is right. Like it's not just bad decision making. It's also desperation because you don't know what else to do. Like there's all those commercials you see, like there's one where the guy's at the grocery store and he doesn't have enough money on his debit card. So he can borrow money so he can buy his groceries. And he's like, oh, thank God. And it's like, and I'm not faulting the guy because like it's an actor in a commercial, but like the concept is that we have a product out there that lends you money at an interest rate so that you can, when you run out of money because you're waiting for your check to clear on Fridays, you can buy your groceries or whatever it is. You can borrow that money almost instantaneously. And that was like, that's like, something you see in the, I don't know what the interest rates are on that, but I'm sure it's,
I've seen
it's predatory. I'm sure
I've seen quite an increase in, it's this, they did the same thing in 2009 and 10 after the great financial crisis, but they got cracked down on where they were doing those like Horizon. It was like these weird places that were like doing these payday loans and they were crushing people and like ridiculous, like interest rates. And people didn't realize they borrowed $500 and they would pay back like 4,000. There's been a rise in a new kind of like payday loan type thing where it's a little bit different, better, I would say better, but still predatory because now they're doing it in a way where they have to disclose to you where they didn't before, like what you're signing up for, like the Klarnas, the Affirms, like these, and you can see them at like Walmart's, like the places where people shop to like save money. The deal is you borrow the money. Like you don't even need a credit check in some of these instances, and you get like a $300 or $400 like limit, more much like the payday loans were. Where let's say you go to Walmart and you buy $300 worth of groceries, and you use that Affirm or that whatever the Klarna, whatever they are, and you have to make payments on that. Let's say you make $30 a month payments for 10 months. As soon as you're 1 day late on a payment, it triggers all kinds of like ridiculously high interest rates. Now, in a perfect world, if you take 10 months to pay your $30 and you pay it on time, 10 straight months, then you essentially get an interest-free loan on that $300.
Right.
But the people that they're targeting for this are living paycheck to paycheck and they don't have $300 to pay for groceries. So that $30 that they have to pay that represents 10% of that bill that they're paying on that day is going to be super tight. And the odds of them defaulting in the next 10 months and that $30 are extremely high. So they might pay like 6 months on time. And that 7th month, when they default, it just triggers all kinds of like crazy interest, which is legal now. And they just end up still paying back like $500, $600, $700, $800 on that $300 that they borrowed because of the way. And again, I'm not saying it perfectly. I'm not really sure exactly the nuts and bolts and the plumbing of it, but that's basically what they created now for people.
No, and that's the same thing with the college loans. Like the college loans that people are, they promise like a 17-year-old or an 18-year-old all this money you're going to get, and there's really not a point where that explains to them, like, you don't have to pay it back for 4 years. Okay, but it's gaining interest you borrowed $50,000, but after 4 years, I don't know what the interest. I don't remember. I haven't read that article in a while, but it explains why it's a predatory loan, because they are under the impression that like they don't have to make payments because they can't afford to make payments because they're going to school, because they're trying to get the education so they can get a better job. So which is a whole nother reason we can joke about the college industry, but that's a whole nother scam out there.
100%. We talked about that last week.
But people are being, don't worry, it's a cheap loan. Yeah, because no one realizes you're not paying. That's why when you get your credit card bill, they only ask you for the minimum amount of money. Well, I only own $20. Yeah, you only own $20 because they know what they're making on the interest. Like, it's funny. Like I have a non-interest loan. I have one loan that I bought a hot tub, and there was 0% financing on it
for a certain amount of time. Yeah.
So for the 2 years, and so it'll pay off whatever it is. I think it's 2 years now, or whatever it was, 28 months or whatever it was. So I made sure that I paid it off in the 28 months, because like you said, if I would have gone to 29 months, then all of a sudden the interest rate went up like 20, 30% or whatever the heck it was.
Yeah.
But it was an interest-free loan in a sense. Like there was no advantage of me of paying for it at the time, because then theoretically the money was making a little bit of money, like because I was only paying the $200 a month or whatever the heck it was for the time period. So there are times that makes sense. At one point, remember, cars they're having such time selling cars at some point that the interest rates were like 0% interest on 30 months or 36 months or whatever what it was. Now it's ridiculous because they know they can.
Yeah. We could talk a little bit about the Clarity Act. I got this tweet up here. The Clarity Act is supposed to be voted on this week. I believe the 14th. They're going to do a vote on it. Watcher Guru tweeted, Senator Bernie Moreno says the banking cartel is in full panic mode over Crypto Clarity Act. For decades, these banks have treated your deposits like the personal piggy bank, paying you next to nothing while lending your money out for massive profits and executive bonuses. Now that innovative stablecoins threaten to break their monopoly and give you actual financial freedom, they're running to Congress again, screaming about threats to economic growth and financial stability. So what's really happening with this Clarity Act that's been holding things up is, stable coins are offering, yield that's much higher than what the bank's offering. And the banks are like, people are going to be highly incentivized to put their money in stable coins. If I can get 6 or 7% in a stable coin, why am I going to put my money in Bank of America and get 0.01?
Right.
There's just there's no reason for that. So your money is technically not your money. Like we talked about this before, people don't know this, but when you put your money in the bank, you are a creditor of the bank. It's technically their money. That's just how our banking system works. People don't know that. Like when you take $1,000 put in the bank, you gave them the money. You're a creditor now. It's their money. They can do whatever they want with it until you come and get it and hope that it's there. I mean, the FDIC exists because you don't want to run in the bank so people can have faith. But in technical terms, when you put money in the bank, it's theirs. So these banks have like all your money in there, and they do whatever they want with it. And if you start to pull the money and put it in the stable coins, it's less money for them to slosh around and do all the shit they do with it. And that's a threat to them. So they're going to use these terms like, oh, we're protecting the consumer. It's a threat to the economy and finance. It's complete and utter bullshit. Anything that they say is shareholders. They care about the shareholders. They don't care about the consumer. So I'm not a crypto guy. I'm a Bitcoin only guy. I'm not a stablecoin guy. I don't own crypto. I don't own stablecoins. I own Bitcoin only. But if people are going to put their money in the financial system and let it sit in a bank account getting 0.01%, you might as well put it in a stable coin that's pegged to the dollar and it's giving you 6 or 7 or 4, whatever it's giving you. It's much, you're getting more value from that than you are from JP Morgan or Bank of America or Wells Fargo that's giving you nothing.
But if you invest your money in KeyBank, then you can see the name of your bank when you go to a hockey game. And that's the funny thing about it, is if the money was just going to increase the money, that'd be one thing. But a lot of it is going for like their projects. Like, we have a suite at Highmark Stadium, and so we can give our executives a cool place to sit for a football game, or we can put our name up on an airport or something. Like, the money isn't like, that's the problem with all these things. Like, and everybody's like, well, that's a way for the county to save money because now they're able to sell those rights. But all they're doing is, it's my money that they're doing it with. Like, it's not the profits that they're doing it with the money I deposit into these banks or any industry, whether it's whether it's one of the medical companies, whether it's Blue Cross Blue Shield's Arena, whatever it is, they're all doing it, and it's all with the money that we pay. Like, that's why we pay so much for these things. And that's why everything costs so much. And that's why then they deny your, when you go in, you can't have that procedure because it's, we're denying it.
So I've been in Bitcoin since late 2013, and JP Morgan Chase, most specifically Jamie Dimon, has been a very harsh critic of Bitcoin, calling it a pet rock, saying it has no value, saying it's going to go to zero. For years, he just talked down about Bitcoin, down about the crypto ecosystem, saying it was a scam, saying it was a Ponzi scheme, and all of those types of things. Putting a lot of information out there for more sophisticated, maybe not the everyday consumer that's wasn't necessarily caring one way or another, but people that actually were looking for places to put their money actively. Smart, sophisticated investors who were turned away from Bitcoin when they could have made significant amounts of money because of the things that Jamie Dimon was saying, some that they looked up to and thought knew what he was talking about. I'm going to show this clip. This is JP Morgan, their new strategy, and how they now view Bitcoin.
Chatting with sources familiar with the matter, I'm told it's still early days, and for now the concept is limited to the firm's trading business. JP Morgan's trading business has for a few months now accepted IBIT, the ETF, as a form of collateral, which it sees as less volatile as the underlying currency. However, I'm told that certain hedge fund managers and asset managers are demanding more of these types of crypto services, although again, I'm told that offering Bitcoin and Ether as collateral for trading is not imminent at the firm. While many remember, as you mentioned, Morgan, Jamie Dimon's comments about Bitcoin being, say, a pet rock, he has moderated his tone recently.
So as you can see, that's a little bit old. That video is about late 2025, but that JP Morgan takes Bitcoin as collateral. These bankers.
I Googled it. I wanted to know, like I said, does JP Morgan own Bitcoin? And they says indirectly through ETFs and stuff. So even though it's a pet rock, they got some pet rocks in their portfolio.
They're just like, the banking cartel is just, I mean, now definitely more than ever, the Trump administration, they're all in bed together. Like they're making money hand over fist. And the stat that I showed earlier, 87% of the top 10% of the wealthiest households own 80% of the equity. So, I mean, I saw last week our stake, I say we're not going to see any of it. The United States' stake in Intel, that 10% stake, is up like 20 or 30 billion since they first got in on it. Like, duh. I bet you the Trump family's got a piece of Intel, maybe not that 10%, but you're damn sure that they knew when the U.S. government was going to come in and buy 10% and rocket ship that price, that they were going to get some of the other shares that are outstanding and put it in the Trump family trust or some Cayman Island account that none of us are ever going to be able to find. Like, it's just.
But the funny thing about that is that if the federal government is taking a share of a company, that's not capitalism. That's the definition of socialism and communism, that the government owns the company. Like, that's the funny thing about it. It's like people were, what a genius. 5D chess, man. 5D chess. I'm like, But I thought you said that was like socialism, where the government, or the communism, where the government owns the means of production. Like, I just kind of laugh. Like, I just don't understand like how people don't see through these charades. Like, it's just all a charade. It's all a charade. And I just kind of laugh about it. Like, I make this joke to my kids all the time. My kids are in their 20s, and I'm like, you're going to work for 50 years. And I'm not wrong. Like, it's not a joke anymore. Like, oh, you're going to work till you're 75. And I was looking at this, like, because it was like, things popped up.
Ben Shapiro thinks you should work forever and never retire.
Well, you're going to kind of have to. Like, there was one, it used to be like 1 in 7 senior citizens worked, like in the 80s. And now it's like 1 in 4 senior citizens work into their 60s to meet the needs that Social Security is not meeting, and not going to meet Social Security, as well as, their retirement funds, and or just trying to make ends meet. It's not about like quality of life. It's like, oh, I'm bored, I'm going to go work. Now it's become, I need to work because I still have a mortgage. I'm 75 years old and I'm still paying off my house. I'm like, oh my God. Like, I mean, there's a level of it that they don't understand. They don't understand economic, like financial literacy at all. They have none. I don't know if they're trying to pay something. I mean, I just don't get it. Like, but if you look at the younger generation, if things don't change, they're all going to be working into their 70s. They kind of have to now because Social Security keeps going up, or retirement ages and employers start going up. So it's not a joke anymore. You're working until you die. Ben Shapiro's right. You're working until you die.
Well, he says it for more sinister reasons. I don't really. I said it because it kind of half joking.
Yeah, he's not saying it for.
Yeah. I'm going to end this podcast on 3 tweets. This first one here is from a Michael Saylor interview where he says the currency supply has been expanding about 7% a year for 100 years. No bill was passed for it. No one voted on it. There is no signature. It's just the air that we breathe. I mean, that's very, very true. Saylor stacking like a maniac. He tweeted this morning that they bought 544 more Bitcoin to add to the 700,000 plus that strategy holds. This tweet here, this is Paul Tudor Jones, who is one of the 3,000 and change billionaires on the planet. And this is him, a 25-second clip talking about Bitcoin.
Knew that the inflation trades were going to take off. And what was, of all of them, what was the best one? At that point in time, it was Bitcoin. Bitcoin is unequivocally the best inflation hedge that there is, more than gold, because Bitcoin is finite. There's only so much Bitcoin that can be mined.
So that's Paul Tudor Jones, legendary investor. He understands markets. He understands investing. He understands hedging. And he's talking about inflation hedges and Bitcoin being the very best inflation hedge. We're going to end the podcast on this video here with Max Keiser. Max Keiser is an OG Bitcoiner. He's been in Bitcoin since it was like $1. He notoriously, back in like 2011, gave Alex Jones like 1,000 Bitcoin, and Alex Jones lost it and never kept it, or whatever the case may be. So you can only imagine how many Bitcoin Max Keiser has if he was able to do that back then. And this is a 2-minute, 57-second clip of Max Keiser talking about treasury bonds and how it's going to affect the future price of Bitcoin. We're going to play the video, and then I'll do the outcome. We'll play the video and then come back to me for the outro after. Okay, Rich? Okay.
Interest rates to tackle inflation an obvious move. But what is the answer to this problem then? What can the US Treasury and the Fed do right now to deal with this looming crisis?
Well, yeah, raising rates is what Paul Volcker did in 1980 when the debt to GDP ratio that was a possibility, and it worked after a massive debt raising of interest rates into the 19%, right? But the debt to GDP ratio right now is 10 times at least higher. So that's actually not going to work. There is no solution That's why people are running into Bitcoin. That's why Bitcoin's worth over $1 trillion now. Why it's going to $10 trillion now is that people are running for the hills. They're getting out of Dodge. They're dumping their U.S. Treasury bonds. They're dumping whatever they can, and they're putting it into Bitcoin. And so Bitcoin, we're going to see Bitcoin be the major winner in this sovereign debt collapse globally. That's how you get to $200,000, $300,000, $400,000 per Bitcoin. Everybody knows it now. Paul Tudor Jones, Stan Druckenmiller, Michael Saylor over at MicroStrategy. They're all openly talking about a speculative attack against the central banks. Borrow at that cheap rate, buy Bitcoin, and let them die. That's what's going on.
And Janet Yellen, for one, expects these interest or these inflation levels, rather, to persist until mid-2022. Do you think that's an accurate forecast, or could we see these problems persist into the years after that?
Last year, Janet Yellen said the biggest problem was deflation. Then they said, oh, you know what? It's actually inflation. Then they said the inflation was transitory. Now they're saying the inflation is going to be around for a few years. We're at the beginning of a multi-year secular inflation that will last quite a bit of time. We're leaving a 40-year bull market in bonds. It started when Volcker finished his job back in 1980, and Ronald Reagan and Margaret Thatcher came to office, and we've had 40 years of lower interest rates. Well, that's now finished. We're going to have now a multi-year period of rising interest rates. It's going to be worse than the 1970s. We're going to see major defaults across the corporate world. We're going to see sovereign defaults. And we're going to see more countries like El Salvador start to make Bitcoin legal tender to get out. And they're openly mocking the IMF. El Salvador is openly mocking the IMF on Twitter, saying, we're buying Bitcoin, ha ha. And we're in a completely new era, a new world, a new global standard, as Rand Paul, a senator in America, has called on Bitcoin to be the new global monetary standard. Not the dollar, not gold, Bitcoin.
That video is from 4 years ago, and it's ironic because everything he said is literally, as we talked about during this podcast today, playing itself out. We're going right down that same road that he was talking about back then, and that the price of Bitcoin was the bottom. Like Bitcoin was in the teens, like it was low 20s to the teens at that point. He was talking about $200,000, $300,000, $400,000 Bitcoin, as we sit at 81,500 Bitcoin today, at a top of 126 7-8 months ago, and not outside the realm of possibility in the next year or two. We're sitting at 250K. As always, thanks for watching the podcast. Please like, share, subscribe, drop a comment in at any of the socials that you may be watching this on, YouTube, Facebook, or X. As always, don't trust, verify. Peace.